Losses to the neck, but now I'm trophied up. I'm saying like
bing bop, boom bop, bing bop, bam. All right, bull runners, welcome back to the channel. So I can't play the audio for this, otherwise we'll get demonetized, but it's good to be back on the channel, even with the crypto market being down. As you can see behind the screen right here, we spent the past few days in the Bahamas, in Baha Mar, having fun out in the sun. And no matter how much time I spend in the sun, man, I get burnt and then I go back to being white. So, I know you guys are commenting on my videos saying, if I live the good life, how am I so white? I guess that's the curse of being Irish and Nordic. But I'm here today to bring you some powerful information about what's happening in the crypto market, because let me just get this little pig off the screen right here. If you guys want to go check out that video, by the way, go to my Instagram right here, Run Life Nick. Follow me, because in this video we have a lot to talk about what's happening with the CFTC to launch digital asset markets pilot with Ripple. They made an official post right here. We're going to cover that, talking about volatility compared to the crypto market versus the US dollar over the last 10 years and what Grok AI predicts the market to be at in the next 10 years that we all need to be ready for. Also, we're going to dive into, the reason why the US dollar is trash, which everybody knows, but to further concrete the point over time and where Grok is going to be investing its money if it had to choose, if its life depended on it over the next 10 years, the dollar or crypto. And we're getting into the crypto total market cap, others compared to the past, and my expectations over the next few months for XRP compared to Bitcoin. We're also talking about, Elon Musk and Coinbase's CEO having proposed putting all US spending on the blockchain. What would that do to this industry? And crypto and AI czar David Sachs, what he has to say about Bitcoin. Also, what he said in a recent press conference about Ripple's lawsuit, and also what Elon Musk is retweeting from him talking about Doge engineers working around the clock and what that means for the crypto market as the clock is ticking. So yes, the past week has been rough in the crypto market, creating a lot of uncertainty. So is this a trap, or is the market going to continue selling off? And what is the smartest move to make in your portfolio? I'm going to be sharing my game plan with you. So if you guys are feeling bullish still, even with the markets being down, take a step outside, or I guess it's nighttime out today, tomorrow, put your feet in the grass, go swimming if you live by the ocean. If you don't, ground yourself, hit the gym. Take a moment to unplug a little bit from the crypto market here and there, because if you're just glued nonstop 24/7 in the market, it can be very, very stressful. How I maintain my sanity, and I'm not here to give you a huge pep talk, I'm just here to explain how I maintain my sanity, see my portfolio fluctuate by millions of dollars, is I have to get out in nature. Otherwise, if I'm just glued to my computer 24/7, especially making videos and trading, then, being hunched over on the computer working 24/7, it's tough. It's very difficult. So you have to have a little bit of a balance. So I work out, I do my best I'm trying to get in good shape here, okay? Those margaritas, they definitely get to me, all right? But over the next year, I'm going to be focusing more on fitness and trading and marketing to help you guys with Altcoin Pro University as well too. So we have a lot of updates to bring to you by the end of this video. Hang all the way to the end. You're going to love it. Comment 777 if you're feeling blessed. If you're feeling bullish, as always, let's run it. All right, bull runners, welcome back. So with the market being down, 20%, 30% for most of these projects, some projects up like Hex or Ultima, some projects that virtually nobody's heard of before. Well, what's happening to your favorite projects that you're holding that are the large caps, the meme coins, real world asset projects, etc.? Well, right here, this is one of the biggest pieces of news that dropped. So the CFTC, they just announced the Crypto CEO Forum to launch digital asset markets pilot right here. And it says they will hold a CEO forum of industry leading firms to discuss the launch of their digital assets pilot for tokenized non-cash collateral such as stablecoins. And participants will include Circle, which is USDC, Coinbase, Crypto.com, MoonPay, and Ripple. So further information on the CEO forum will be released once the details are finalized. And they're saying the CFTC is committed to responsible innovation to deliver on the Trump administration's promise of ensuring that America leads the way on economic opportunity and making America the crypto capital of the world. The acting chairman has previously proposed a CFTC pilot program as a U.S. regulatory sandbox to provide clarity, regulatory clarity for digital asset markets and ensure that robust guardrails are in place. And also the CFTC's Global Markets Advisory Committee released a recommendation last year by its Digital Asset Markets Subcommittee on expanding the use of non-cash collateral through distributed ledger technology. So in all of my videos, I said the spending power of the dollar is going down, cryptocurrencies, distributed ledger technology is going up over time. And so this brings me to the conversation that I had with Grok here on Twitter AI, saying that volatility is the price you pay for opportunity. So can you explain how the US dollar is more volatile on the macro than the crypto market over the last 10 years? And so that led to a long-winded response of macro trends, using metrics like the US dollar index, the DXY, the DXY, central bank interventions, monetary policy adjustments, and then comparing the data of both of them together, such as the spending power that the dollar has lost over the last 10 years, and the percentage that total 2, which is the crypto total market cap excluding Bitcoin, is up over the last 10 years. And the main response was that the statement that the US dollar has been more volatile on the macro scale than the crypto market over the last 10 years is not supported by the available data or economic analysis. And so I pretty much took all of the data and economic analysis that Grok gave me and said this. Over the last 10 years, the US dollar has experienced a significant loss in purchasing power due to inflation. Grok also said the US dollar has lost approximately 25% of its purchasing power since January of 2020. This would imply a notable decline over the last decade, considering the acceleration of inflation in recent years. And then I said, and to think that data is from the last 5 years. You also said, in quote, since 1971, when the US dollar was no longer backed by gold, it has lost over 96% of its value. That is crazy, 96%. It suggests a trend of continuous devaluation. On top of that, you also said the total cryptocurrency market cap, excluding Bitcoin, often referred to as total 2, has seen a substantial increase over the last 10 years. Within the last 5 years, the increase is approximately 1,320%. Who knows how accurate that is? You guys can fact check AI here, but all time the growth is noted at 3.4 million %. So if I Google the definition for volatility, it does say liability to change rapidly or unpredictably. So the crypto market in the short term adjusts very rapidly and unpredictably. That's why we see it drop 20% over the course of a week. So in the short term, more volatile definitely than the US dollar. So then my question was this: if the US dollar has lost over 96% of its value since 1971, and the crypto market total 2 is up 3.4 million % within the last 10 years, then would you admit that you're wrong? And so then it gave me a long-winded response here, saying that I'm right to point out the discrepancies in the previous explanation. And then Grok did clarify about volatility versus value loss and the difference there. So about the speed and unpredictability of price changes over short periods versus the loss of purchasing power due to inflation is a different concept, which actually is a great nuanced point that I want to talk about in this video before we get into the charts here. Because I then asked, if you were an investor, where would you keep your money long term? You only have two options in this scenario, the US dollar or the crypto market. You can't hold both, you can only pick one. Then as always, it gives me a long drawn out generic answer, so I have to prompt it to be more specific, saying I didn't ask for a long answer. Write one word, US dollar or crypto. And Grok said crypto. So I said fill in the blank. The crypto market is less what in the long term than the spending power of the US dollar. And so the crypto market is less predictable in the long term than the spending power of the US dollar. And so the predictability here is the downfall of the US dollar, and the reason why crypto is what Grok would hold long term, because predictability in the spending power of the US dollar over the long term stems from several factors like historical inflation rates over long periods. Especially recently, the Federal Reserve's target range of around 2% inflation annually provides a benchmark for expectations to make the US dollar's decline in value over time more predictable, along with monetary policy, the Federal Reserve's actions on interest rates, quantitative easing or tightening. So I'm not going to get into a whole history lesson here of all of this stuff. The main point to focus on is this. When I ask Grok, where would you expect the crypto market to be over the long term? Don't give me a it depends type of answer. If you really could make a calculated guess like your life depends on it, give me that answer. And so given the current trajectory and historical data, if my life depended on making a calculated guess, Grok would predict that over the long term, the crypto market would see significant growth with a total market cap exceeding 20 trillion in today's dollar value by 2040, and then gives explanations for this, like adoption rate, technological advancements, regulatory clarity, inflation hedge, market maturation. And then I want to get even more detailed here because he said over the long term, based on today's dollar values. And I said, what would that be in 2040 US dollar value? And that gives me this long equation right here and says $27 trillion. So where is the crypto market right now? Well, it's at $3 trillion. So that's a 9x from right here for where everything is at. So when we look at the charts in a little bit, the trap that's being set in the short term is to shake out people who cannot hold for the short-term volatility. And then the long term, based on the devaluation of the dollar, is the reason why volatility is the price you pay for opportunity. So in the short term, the crypto market's very volatile to the up and to the downside, but over the macro, the dollar's dropped 96%. So it's predictable volatility. So if you think crypto is bad, imagine holding this crap coin right here, 27 trillion supply. Maybe, who knows? We just know the Federal Reserve keeps printing more, so there's no supply cap. 25% was minted within the last 6 months. 1% of holders own 30%. It's lost 96% of value since its creation. Even more than that, that was just since 1971. It's literally backed by nothing. So when people say they don't trust crypto or that crypto is not safe to hold long term, they have absolutely no clue what they're talking about. So share this video with them because we backed it up off facts. And if you don't believe me, go ask ChatGPT or Grok yourself, or go and do your own research. That's what these videos are for. I'm not a financial advisor. These videos are purely for education, informational purposes only, to help you do your own research, because crypto is risky. You can definitely still lose money in these markets. Don't get me wrong. If you're buying peaks and you're selling bottoms and you're trying to swing trade or day trade on leverage and you get wiped out and liquidated, you'll definitely lose a lot of money. And that's why we created Altcoin Pro University. And we have 1,200 members in here to help you guys preserve your capital so you don't get wrecked through scams, so you don't get hacked through shady developers, and you can have a more solid, grounded approach to the market and know what to do through 100 plus expert curated classes. So you guys can check that out in the link in the description below. But let's just look at where we're at in the market right now, and let's compare back to the past and how long it took before the crypto market had a major correction last bull run. Because as you guys can see, when we transitioned from orange to yellow during the Bitcoin stock to flow rainbow indicator back in the past was right around the end of November. And so it was roughly 160 days where the crypto market went from about $40 billion upwards of $400 billion. And then we saw this major sell-off take place that was over 60% for others, which is everything outside of the top 10. If you go to coinmarketcap.com, you see Bitcoin all the way to Tron right here. So you got Ethereum, XRP, Solana, BNB. Then you have this USDT and USDC stablecoins. So everything past Tron, then you got Cardano, which would be like Chainlink, Avalanche, and everything else in the industry is what is measured on this chart right here. So a 60% pullback after 160 days. So how far are we into this yellow phase right here? We're about 126 days. And what's interesting is the rally that took place off of the 200 moving average right here at about $200-ish billion, like 190, pushed us up to 450, and then we saw a pullback really fast. So this market is looking a little bit different. Everyone was expecting this previous high from the 11th of March on the right-hand side of the screen right here to hold as support, and it didn't. It fell back down below it. So now we saw the wick off of the 200 SMA. So it's still good that the 50 is above the 200. However, we are in a critical zone right here where if others does not hold above the 50 and does not hold above the 200, it could get nasty. And this would go against everyone's expectations, because roughly 126 days into last bull run cycle, we were right here at 260 billion, breaking out to the upside. And even with that short-term temporary pullback to 37 billion, it held support and gave everyone a clear signal of what was coming next, which was a massive breakout. So we're getting some mixed signals right now. Also on the stochastic RSI, we saw during that breakout after orange going into yellow on that major move in the market right here, we also saw the stochastic RSI come all the way up here above 80. Well, we saw the same thing happen on the stochastic RSI going from orange to yellow at the bottom of the screen, where the stochastic RSI came all the way up above 80. And then on that pullback, we're seeing it pull back down where the K line's at 14, the D line is at 25. And so that pullback happened after the markets had peaked out at $400 billion right here on that 60% pullback that I just showed you back to the 50 SMA while the stochastic RSI was resetting down here. Once it reset below 20 and we saw a bullish cross below 20 by like the 12th of July, the market found its low at about $130 billion for others. And then we saw the bounce to the upside for the all-time high. And then the stochastic RSI rocketed back above 80. So there is some good news that I do have for you here on what I'm looking for in the markets, because what I look to buy is macro. So we're on the weekly, right? Look in the upper left-hand corner. On the macro market view, I look at the weekly. Sometimes I'll look at the 2-week or the 1 month. The 1 month is even stronger of a signal depending on where we're at for like the stochastic RSI, the MACD, and then the relative strength index as well too. And then I do pair that with some, moving averages as well to give me a gauge and sort of like a heartbeat on the market. Because as long as the 50 moving average is above the 200, that's a good sign for the bull market. And generally, I want to see the price stay above the 50 the majority of the bull run. So we have seen some choppiness below the 50, but relatively above the 200 thus far this bull run since the breakout back in October of 2023. Now, the stochastic RSI is also resetting back below 20 here if the D line continues to trend to the downside as the market finds support over the next few days. Now, what I would want to look to buy is the stochastic RSI below 20 forming a bullish cross while the price holds above the 200 SMA. That's what I would want to see. And that would be a green light for me to enter into some positions that we'll be sharing with you guys inside of Altcoin Pro, and our research team will be talking about when you click on the community section. You click on more right here, and then you go into the altcoin picks section. So definitely plug in there, because once the stochastic RSI resets, we don't go down forever, we don't go up forever also. There's periods of ranging, sideways boring trading action, and then there's trending market. So on the macro, when in doubt, zoom out, we're still trending up. You can see this ascending support since ultimately the bear market bottom we've been forming. I'll just circle this so you guys can see what I'm looking at. The low was in December 2022. Well, we formed a higher low here. We had a higher low here. We had a higher low here, a higher low here. We have a higher low here. Even with this pullback, we're still forming higher lows, which is a great sign. So regardless of this looking different than last bull run cycle, every bull run is going to be different, right? It's not going to be the exact same. We can just look at the past and get an idea of relatively what to expect. And there's going to be some differences in the pullbacks are going to happen at different times. As you can see, the pullback right here from March of 2024 until August of 2024 was a lot more drastic during this orange phase right here than it was during the orange phase right here, because we were breaking out of COVID. Whereas the pullback during the purple phase was a lot more rapid last bull run than it was during this bull run, because we were breaking out. So don't expect it to look at the exact same. What we look at are the fundamentals. So on the macro, the stochastic RSI is approaching oversold conditions. And in order for something like XRP to break out, we would want to see Bitcoin break out and causing others to break out as well too to the upside if it holds this ascending support and also holds the 200 SMA while the stochastic RSI resets below 20. Now, looking at XRP's price chart, this has thrown people off a little bit, and even me, because I was expecting, and obviously you can't get too rigid in these markets. You have to be adaptable. You have to be able to modify your approach in the short term at least, but for the long term, my thesis remains the same. I believe we're going higher, and I'll explain why in a little bit if you continue watching this video with some clips they have to play for you. But my expectation was for us to hold this support here on the previous level, similar to what happened with Bitcoin when it rallied upwards of $5,000 in September 2017. We saw this sharp pullback right here to backtest the previous resistance that it got rejected at multiple times before it broke out. And so we were seeing XRP hold it right here, attempting to hold it right here. And then the tariff news came out about, Canada, Trump, etc. And that spooked everyone out of the markets in this crazy wick to the downside to like $1.77. And so we've seen scare events like this happen before. Just this one was even more drastic than, COVID, like FTX, whatever it was. We saw more liquidations than virtually any time in history in the crypto market. And so right here on the 16th of July, 2017, we see these liquidity flush out events. And so in my opinion, stuff like this is stop hunts for the exchanges to basically liquidate all of the leverage traders on their exchange because they can see the order books. So for example, Binance can see through, and anyone can see this too. You just look at liquidation heat maps You can just go to this website right here, coinglass.com, look at the liquidation heat maps, and it'll show you on Binance where the majority of leverage is over the past 24 hours, 3 days, 1 week, 2 weeks, etc. So if I zoom out over the past week, it'll show us where the most leverage is to the downside. So there's like $120 million down here and $95,000. And there's a lot to the upside as well too. So what the exchanges do, like Binance, is they can, because they hold so much Bitcoin, they can look at these liquidation levels, and if they sell a certain amount, it'll drop the price down within a range. And then we see that liquidate these traders, which drops it even more. It creates a domino effect, and then it finds a low and it rebounds on out of there, because then they could just buy it back up again after they've liquidated their traders. Because the problem is, if these traders, for example, if you enter into a long on XRP at like $2.80 and you get liquidated if the price drops, like if you don't have a stop loss and you just like have a margin percentage of 5% on your leverage position, and let's say your liquidation level is like $1.86, they can see that. And then once it goes down here, if you liquidate your whole account, you now have no money left in your leverage account, to where the price gets bought back up again, pissing everybody off. And so for XRP right now compared to Bitcoin, there are some differences here, because as you can see on the 15th of September right here, during that sell-off to backtest, well, XRP did not hold the high of the 2nd of December. So we're just back within the range that we were at from the beginning of December until the breakout and the middle of January. So this is what's throwing people for a loop here, because it looks unpredictable, it looks manipulated. Whereas the 2017 bull run for something like Bitcoin was a little bit more predictable, where once we broke a range, we form a new range, and then we just back test the previous range. For example, we see breakout right here, back test. You know, that gets bought up, then we consolidate, work our way through here, breakout, back test, right? Form a new range, back test the previous range. And we do that several times until we hit the peak. And even sometimes when you break out from a range, you go so parabolic that you don't even back test the previous range, and you just see a sell-off much higher than where the last resistance was right here. So because XRP didn't hold support, the markets are now in a defensive state right now, because they're waiting to see if there's a final capitulation event to the downside to backtest where that wick went to, or if we're going to hold this ascending support for XRP right here. So this is not a time to be entering into leverage longs right now, because we are in a downtrend since the middle of January, forming lower highs and lower lows. And plus we see resistance right here at roughly $2.80 within this zone right here, that even with a bounce for XRP, I would expect it to get rejected as we coil up in here if we see a move to the upside. So what this is reminding me of is this right here for Bitcoin. When Bitcoin sold off from about $3,000, on the left-hand side of the screen, you can see XRP selling off from the all-time high of over $3.30 something cents. And we just see this descending resistance. Same thing for Bitcoin. Lower high right here, followed by a liquidation event to the downside, stop out a lot of leveraged long traders that were looking at this like a symmetrical triangle, buying on the apex right here on July. And you don't want to buy apexes on triangle patterns. You buy the breakout and the back test. Again, not financial advice, because if you bought the apex here and you longed it, well, then you got wrecked to the downside, liquidated, and then it gets bought back up above this descending resistance. Now guess what? We see a back test to the T right here on the 26th of July, 2017. That's a great entry position. And then you just simply set your stop losses below that level, depending on your risk to reward ratio. And then you set your longs to the upside past the high. And so for XRP, we saw this liquidation event all the way down here, and we're just waiting to see if XRP can do what Bitcoin did right here during this phase and break out to the upside. It's taking a little longer than expected though, which is why people are calling this a trap right now in the short term. So what I would want to see for XRP is XRP to break to the upside back to this descending resistance. And eventually at some point, I would want to see it clear it, a potential back test holding it as support. Then that's when I would be considering entering into long positions on XRP, because it'd be giving me a clear indication that there's strong buy side demand to continue the trend to the upside and eventually break the all-time high. But until then, the trend is your friend, and I'm going to be watching $2.80 as resistance within this range right here for XRP if we continue moving higher. So am I selling my XRP right now that I have in spot? No, absolutely not. I'm just holding for the long term because there is such macro bullish news coming to the market with what's happening with Donald Trump, Elon Musk. For example, both Elon Musk and Coinbase's CEO have now proposed putting all US spending on the blockchain. This means $6.9 trillion of US spending per year would be placed on a decentralized ledger. What does this mean? Well, first, it's important to understand how blockchain works because a blockchain functions as a decentralized digital ledger where data is stored in blocks that are linked together in a chain. This means that the US government spending would by far be more secure if implemented properly on the blockchain. But why is it more secure? Well, because when data is stored in these blocks, it becomes a part of an uneditable digital chain. They can't just be lost in wiki links or emails or whatever it is that Hillary Clinton did. Ledgers can be permissioned to restrict viewership, and fraudulent spending is almost instantly flagged. It is also virtually unhackable if done correctly. Furthermore, the blockchain could be publicly accessible to increase transparency. And currently, the US government's spending database is built in an append-only way. This makes searching for specific words in the database virtually impossible. It is not transparent, and that's why Elon Musk created the Department of Government Efficiency. For example, after weeks of digging through data, Doge found this: 62 contracts worth $182 million, which were entirely for administrative expenses. This includes a $168,000 contract for an Anthony Fauci exhibit at the NIH Museum. This is only the tip of the iceberg here. Look at this. The US Pentagon couldn't account 63% of its $3.8 trillion of assets in an audit. It's hard to believe this 2023 press release is real. The DoD says they have $3.8 trillion in assets and $4 trillion in liabilities. The balance sheet doesn't even balance correctly. Because if you have $4 trillion in liabilities and $3.8 trillion in assets, you're going to go bankrupt quicker than a homeless dude. By using blockchain technology, payments would be easily tracked and audits could even be automated. So, what do you think Elon Musk would want to do with the Department of Government Efficiency to audit and track spending? Well, of course, they're going to do this on the blockchain. It is not only the best solution, but it's pretty much the only solution right now that they have, because audits could even be automated. This is why many large banks are already using blockchain technology. And even Jamie Dimon of Chase says blockchain technology is what they're focused on at Chase Bank. 56% of cross-border businesses have integrated blockchain technology into their operations as of 2024. And the US Pentagon spent $1 billion to audit just their 2018 financials and failed the audit. Their goal is to pass an audit by 2028. That's $10 billion in costs, which could be cut from multiple government agencies if blockchain is utilized. So blockchain removes inefficiencies. Also, another benefit would be eliminating ghost beneficiaries. Blockchain could ensure that aid programs, pensions, and Social Security are received only by eligible individuals, reducing fraud. In 2022 alone, there were 13.6 billion of improper Social Security payments. The biggest downside is that the plan would be met with unprecedented resistance, which is why they've been hating on Elon Musk from the mainstream media, saying, how could an unelected person get in there and start making all these things happen? So we're going to be seeing legal barriers and resistance from the bureaucracy like never before. This is already started as federal judges have restricted Elon Musk and Doge's access to payment systems. So resistance will come from the beneficiaries of these inefficiencies, the people that are getting paid off. For example, over $322 billion of taxpayer dollars have gone to various 501c3 organizations per Data Republican. Most taxpayers have no idea this money has gone with $724 billion of total contributions. That's insane. It's almost $1 trillion right there. You see other cash contributions, indirect government monies, total taxpayer dollars. So if the US government wants to eliminate deficit spending, we need to cut $5 billion of spending per day. The US is now spending 44% of GDP per year, the same levels as World War II. Most will be surprised how many problems will be fixed if the deficit spending is eliminated. And more disruptions means more opportunities for investors. So investors who can adapt to change will find the market to be highly profitable. And by moving US spending to the blockchain, it's going to help build efficiency, security, transparency, because by 2030, Deutsche Bank estimates there will be over 250 million blockchain wallet users. And so the amount of people that are to be coming on chain is going to be massive. And as banks have the ability to custody crypto and allow people to buy crypto directly in their bank account rather than going through Coinbase, then the speed and the efficiency of bringing in the masses into the crypto market is going to skyrocket. And so with Donald Trump talking about the sovereign wealth fund and also appointing David Sachs as the crypto and AI czar, listen to this.
The feasibility of a Bitcoin reserve, you said that's being studied. It's one of the first things that's on the table here. What goes into that process? Is that something that would be standalone, or is that something that could potentially be tucked into, say, a sovereign wealth fund, which has been the speculation today on the heels of that executive order?
I guess it's possible that the sovereign wealth fund could decide that they want to make Bitcoin or digital assets part of its portfolio. You're going to have to ask the incoming Commerce Secretary Howard Lutnick about that. The item that President Trump asked our working group on digital assets to study is whether it's feasible to create either a Bitcoin reserve or some sort of digital asset stockpile. And so we're going to be looking at that question. We haven't committed yet to doing it, but it's one of the first things we're going to be looking at.
Now, also, he just recently had a press conference that Brad Garlinghouse reposted saying this.
We're coming off, frankly, 4 years of arbitrary prosecution and persecution of crypto companies where the SEC wouldn't tell founders what the rules were, but then they would prosecute them. And many founders have even told me stories of being debanked personally just because they had founded a crypto company.
So what do you think he's talking about? He's talking about the Ripple versus SEC lawsuit over the past few years. It's the largest lawsuit in history in the crypto market, with one of the most powerful crypto companies that has the third largest cryptocurrency, XRP, which is the second largest altcoin at $141 billion market cap. And Elon Musk said so true to David Sachs saying that Doge engineers are working around the clock. What could they be working on? Check this out.
Any fun anecdotes from Doge you want to share?
I'll give you one anecdote, which is I've been working late here a number of nights at the EOB. And I won't tell you where the Doge guys are based, but I know where their office is. So I just went by there to say hi. The whole room was full of young coders. I think they were engineers, but they were wearing like suits and ties. So that's a little different. But they were all working really late. I mean, they're working there late up Friday night. And the facilities people don't know what to do because they've never had people like asked to stay late on Friday night before. So they've had to create new facilities access for these guys.
So when Elon Musk came in and purchased Twitter, he pretty much fired everybody. And so Elon Musk is coming in and pretty much getting rid of all of the waste and draining the swamp, so to speak, in the government for all the inefficiencies. So hate on Trump all you want, hate on Elon all you want. The facts are the facts. It's only a matter of time before adoption takes place globally, and we're seeing it happen right in front of our eyes. The time is ticking. For example, Cboe Exchange filed to list and trade spot XRP ETFs for several issuers, and so Brad Garlinghouse just put this little clock emoji. It's only a matter of time before an XRP ETF gets approved. So until that happens, there's ways that you can benefit and make money in the crypto market, like subscribing to our channel, checking out Altcoin Pro to get our top altcoin picks, market updates, announcements, airdrop picks, crypto news from our research team, and also get your questions answered. Plus, underneath the calendar up here, we have calls every single month, a couple times per week. The next call's coming up on Monday, then we have another one on Thursday. So if you guys want to stay in the know on what's happening in the crypto market, not only on a daily basis, subscribe to the channel, but if you also want to receive top-notch education about everything from the foundations of crypto, the building blocks of Web3, how to protect your crypto from centralized exchanges like FTX shutting down, how to understand more about DeFi, researching altcoins, how to structure a proper portfolio, crypto taxes, along with portfolio management, then what I want you to do right now is click the link in the description below. It'll take you to a page that looks like this. It's only $97 to get started. You can pay as you go, no contract, no commitment, or $970 a year. You save $194 and you unlock 2 exclusive bonuses that you could read right here. But what's included is a new and improved version of what was sold for thousands of dollars all through last bull run and bear market, and 100+ expert curated classes, plus our entire community of crypto whales and even everyday people that are looking to become an altcoin pro just like you. So join over 1,200 people. I would love to see you guys on the inside. Worst case scenario, you learn something new. You watch this 26-minute video. It's not for you. That's completely fine. Like I always say, best case scenario is you become our next $1 million success story in the crypto market and you completely change your life. As we back up our truck all the way to the bank, grab the bags, pack them and stack them, leave no bags left behind, because we believe the spending power of the dollar is continuously going down in value. That's just a fact based on what I've covered thus far in this video. Cryptocurrencies, blockchain technology, distributed ledger technology is going up in value over time. That's also a fact, and together we're all running to the top. So I'll see you on the next video. I will see you inside of Altcoin Pro University when you click the link below this video right now. As always, you know what to do. Stay bullish.